Hey YouTube, what's going on? It's your boy TriniFX here, back with another video. Alright guys, let's see how today went, and I just want to really talk about how to navigate in a choppy market, guys. Today was a little choppy in the AM. Um, we could see price more or less looked like it completed a market maker sell model, taking out this low that was made on the 6th of August. We could see price traded down and then traded off. So, and we are in a daily, a hourly, and a weekly busy, guys. So we were kind of in between this hourly CB and this busy. If I zoom in here, just so we can get a better look. So coming into the market, we could see it just accumulated in Asia. Market open, we traded higher. We never took out Asia high, but we began to trade lower. So all in all, see respecting bearish PD areas traded up into this fair value gap, coming off of London, traded higher, and then pre-New York we had this big displacement. So we could see it even more clearer if we go on a 15-minute time frame. We could see from 7 o'clock we just displaced lower, leaving behind this hourly CB and trading into this hourly BC. So we were kind of in between these two hourly fair value gaps, guys. So I could have anticipated a choppy or a slow New York, and that's exactly what happened. We could see the market opened, and if we were going higher, you know how I want to see what I want to see. I want to see price trade down. So if price could have traded down into this 15-minute BC, I would have taken a long, but that didn't happen. Price just traded higher and traded back into this 15-minute CB. So I dropped to my 1-minute time frame just to see what price was doing on a 1-minute chart, to see if we could have framed an entry. I wasn't rushing anything today, seeing that the pre-market we had that large displacement leg. We were in between two higher time frame PD arrays, so I just let the market come to me. You can see price open, rally up, traded lower, and then traded higher into this 15-minute CB. Now one could have said, price traded down into this fair value gap here, and we could have taken an entry to go long. Yes, but that's not how I trade. Even if you took an entry and you got out, alright, great, you could have gotten 60 points. But I was just waiting to see a trade into a higher time frame, a 15-minute or a 5-minute fair value gap. So it did here. I marked off my first presented fair value gap. This was my first presented fair value gap, because this was 9:30. So this was the first candle. So I marked this as my first presented candle at the 9:35. So price traded up, and we could see the body is respecting this 15-minute CB. So I waited. Price traded back in, traded higher, and then displaced and closed back below this first presented fair value gap. So I'm thinking to myself, alright, we traded up into a bearish 1-hour fair value gap and a bearish 15-minute fair value gap. So I was waiting to see price displace below. It did, and then it rallied. It displaced one more time. It's on the close of that candle. I took my entry. I was also looking at this as a breaker, this high to low, higher high. So I was taking my entry within this breaker. To be honest, it was a risky trade because it never closed below the breaker. So I took my entry, and price traded down. Once it took out the 9:30 candle, I took my profits off the table because we were trading down into a 15-minute bullish fair value gap now. So you can see we were in between two hourly fair value gaps and in between two 15-minute fair value gaps. So I'm glad I did. After that, we could see price just consolidated. Let me show you my execution. I took it on my personal account. So this is the entry that I took. First presented fair value gap, price closed below, and as that candle closed, I entered. There you can see my execution, and I got out as soon as price traded below. That's where I exited the trade. So this was taken on my personal account. Let me just get this out of the way. Alright, so this was the first trade, and then price just chopped around, and I was just waiting to see, alright, what was price going to displace, lower or higher. So this second entry, and I took this on my funded accounts. So I recorded this entry. Check out my YouTube shorts. You'll see the entry. It was a better trade. It did stop me out in profit after I took my partials, and price ultimately uh, went back up, stopped me out. So all in all, between 9:30 and about 11, it was very choppy. That's why we went through this. From 11, we started to see some displacement lower. You could see then price displaced lower. So after I took this trade, price rallied up, cleared all the buy side liquidity here, retested the 15-minute SIBI once more, and then we had this large displacement inversing all these candles here. That's where I went short. Price just slowly went down, and I took some partials. I didn't get the partial fill that I wanted. I just stepped away from my desk, and it was on this candle here I took partials, and then price ultimately stopped me out in profit. So guys, on a day like this was a choppy New York AM, right? In my experience, what I've seen, once we are in between like higher time frame PD arrays, expect that you may go through a consolidated period until one of those PD arrays are broken. So until this one hour is either broken to the upside or the 1 hour is broken to the downside, guys, price just more or less bounced in between. If I go back to the 1 hour time frame, you can see what I'm talking about. See how price more or less just stayed between this SIBI and this BISI. Yes, it ultimately took out the sell side, but this was a grind. This was New York AM here. Up and down, and then it traded lower, and then it came off. So choppy markets, if you're in between two higher time frame PD arrays, or if Asia had a large displacement, more than likely you can expect New York AM to be choppy. So that's why you should probably trade the PM session. I don't really trade the PM session. So if I don't see something in the AM, I'm done for the day. I go about my business and take care of my other stuff. So today you should have taken your time and look for the best opportunity based on your model and the way you trade if it presented itself. So guys, I hope you found some value. Choppy markets will always be there. We wait for our high probability trade and take that. All you need is 1 or 2 trades for the week that will yield a high risk to reward, and that's it, guys. I see many people on YouTube, going for 20% return a month. While that's good, if you just do 1%, try to do 1% a day, guys. You know that's 5% a week. So worst case scenario, you take your best 3 setups for the week. You can walk away that week with between 1 to 3%. And if it's 1% a week, that's 4% on a month. If it's 2% a week, that's 8%. Right? So 8% on, let's say, $100,000-$200,000 account. That's nothing to laugh at, you know. So let's keep our expectations realistic. Can you make money in trading? Yes. Is it that simple that how people go? No, it's not. A large part of it is psychology. Sorry, right? It's in our mind, right? Yes, you could master a method to trade, but it's psychology that plays a critical role. If you watch my last YouTube short, that's what I went over. Because many people would have missed the move or took a loss, and they want to get back that loss immediately and end up losing more. I've done it many times, so I know what I'm talking about. So, guys, let's just stay patient. Let's see what tomorrow brings. Tomorrow is Friday. Don't rush anything. Um, the August month is coming to an end, and hopefully September will bring and start back having some clean price runs. So that's it. I hope you guys found some value. Like, subscribe, share the video, and I'll talk again with you guys tomorrow. Stay safe. Bye bye.